Kaizen, the wealthy man's secret to getting more with less. NIW is independent of any insurance company that would provide the insurance policy for this strategy. The choices we make today will impact us for life. A. Use your own savings, rely on your own investment choices, and rely on your own insurance protection. Or B. Partner with Kaizen, a strategy that utilizes bank leverage to fund a life insurance policy to provide protection and accumulation potential. So what exactly is leverage? Leverage is driven by the idea that profits will grow at a higher rate of return than the cost of borrowing. Example, you use a bank loan to purchase items with the hope that they will appreciate in value. You use leverage to buy a bigger house. You use leverage to purchase an investment property to rent or flip. To illustrate the advantages of leveraging, let's look at a typical real estate investor. That investor could buy one house for $100,000 and make a minor profit, or 20% down and borrow the other 75% and buy 4 houses and quadruple the investment. This shows the power of leveraging. The founder of modern management said, you use a loan to expand a business without tying up your cash flow. Business that is easily defined, it's other people's money. The key to Kaizen is the use of leverage. Leverage provides access to additional money that can be contributed to the life insurance policy, allowing you the potential opportunity to accumulate more cash value than you would otherwise be able to accumulate on your own. Banks provide leverage. Most of us are familiar with using leverage to purchase our houses and our cars, but most of us are not aware we can use leverage with our benefits. How does it work? Participants receives bonus. The participant uses that bonus to set up a trust with a third-party trustee and designates the beneficiary. The trustee opens a money market account for the participant. The participant waits for the funding date. Once there is enough participant to obtain optimal loan pricing, a master trust is formed. The role of the master trust is an aggregator of the individual's trust to negotiate loan terms, pricing, and obligations. The master trust is the borrower of the Kaizen loan, therefore the participants nor the participant's company are required to sign loan documents, which is a great thing. The master trust requests the loan on behalf of the individual trusts. The lender adds up the cash in each trust to make sure the total loan is secure. The lender goes to credit for a loan approval. Once approved, the lender will sweep each trust account, add the loan amount, and send directly to the insurance company. The insurance company will issue each policy to the trust. The trustee will then sign the policy to the bank until the loan is repaid. To illustrate the advantage of leveraging, let's look at the typical real estate investor. That investor could buy one house for $100,000 and make a minor profit. So with different down payments, you can see what the cost is for the client and what are the loan benefits. Using the same logic, you can use a bank loan to buy a larger cash value life insurance policy. When designed correctly, cash value in the policy could accumulate over time and eventually exceed the cost of borrowing. The only difference is that with Kaizen, the policy is the only collateral for the loan. NIW has a 95% persistency rate with Kaizen. This means with all the policies that are currently on the books, 95% of those policies still remain on the books. This is substantiated by the insurance carriers and the fact that NIW services all of the Kaizen strategies. How many houses would you finance if the house had principal protection? This is the same scenario, but for the exact $25,000, the client costs are much less. There is no loss to your money. Now the life insurance is the asset. $75,000 down, no collateral needed. Let me go back to the last slide and you can compare. This is your money and this is using the Kaizen strategy. Now, how do we apply leverage to life insurance? Using the same logic, you can use a bank loan to buy a larger cash value life insurance policy. When designed correctly, cash values in the policy could accumulate over time and eventually exceed the cost of borrowing. The only difference is that with Kaizen, the policy is the only collateral for the loan. Now, why banks want to provide loans for NIW? For many reasons. One, NIW was formed in 2000 and has facilitated over $4.7 billion of leveraged life insurance loans. NIW only markets conservatives and practical designs. NIW has the highest persistency rate in the industry at 95%. Their design maintains a standard deviation of plus or minus 5%. NIW services the loan until repayment. Last of all, business partners are national Fortune 500 banks and A or better rated insurance carriers. Now, what are the financial obstacles facing physicians? Obstacle: malpractice. 25% of US physicians are sued for malpractice each year. With Kaizen solution, it has an asset protection feature that prevents beneficiary and potential creditors, including previous spouses, from gaining direct access to assets within their strategy while you're living. Potential benefits of using Kaizen: the result is the opportunity for significantly more substantial retirement income and protection for you and your family. Includes death benefit with living benefit included, chronic and terminal illnesses. It also has retirement distributions which can be used to supplement your retirement income. Kaizen was uniquely designed to take advantage of leverage by combining it with the cash accumulation features of life insurance to significantly enhance your potential for more income in retirement while providing more protection for your family. For more information, please contact me. I'm looking forward to speaking with you. Be safe and healthy. Thank you.